Hey, good almost afternoon. This is the professor with Day Trading for Success. We had a very successful day of trading already with the open strategy and the RV strategy. And we're about to show you a whole bunch of inside information and news, so you should stick around.
Welcome to Day Trading for Success, hosted by the professor, a former math teacher, professional trader, and coder for Charles Schwab's Thinkorswim platform. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, welcome back. So I'm in the studio today. Most of the traders have left. Alan's still behind me working. We aren't going to be doing the power hour today, so I had a little bit of time here to go over some of the most asked questions. So we hit a couple of milestones today where a bunch of other people did really, really well, trading the RV strategy. And we were kind of going over some of the most frequently asked questions about that strategy and about all these indicators and about how to set it up. And I've done multiple videos about it. And so what I'm going to do is on this video, I'm going to share with you some inside information and news, but also I'm going to bring in some clips of some of the previous videos to teach you why is the RV strategy so good and how do we set it up. So I'll bring in some various clips that are on other videos already, but it'll just save me from having to redo them because there's nothing wrong with those clips. So what do we do in a market that's going down like it is right now? We make money. We make money the same way we do when it goes up. You just play it short rather than long. And it is harder if you're going to go long. Although a bunch of people made money today going long on Tesla in between going short on Tesla. So, that could be done. And as you can see with NVIDIA, it's the same type of situation. You can go long, you can go short, then you can go long, you can go short, then you can go long. And it's just a matter of what kind of strategy you have set up. Now, we are not worried about a down market if you're a scalper and a day trader. That's the one thing that's so great about day trading that I keep trying to bring up to people. You get freaked out by trading on a 1-minute chart or a 5-minute chart, but what you don't get freaked out about is watching your capital go down when you hold it overnight or for a week or for a month and it goes down. I mean, the best thing to do, of course, would be to get out right before it goes down and then ride it back up and get out right over a couple of weeks or a month or a year. But it's almost impossible. I was watching somebody on CNBC this morning basically saying, they were trying, everybody's freaking out right now. And they were asking, well, what is your position? What is your company? What is your finance? I'm not going to name his financial institution. Most of you watch CNBC anyway, probably. But he basically was saying that he just came right out and said that we can't predict the long-term moves. It was kind of funny because all three of the hosts kind of looked at him like, we just know that it's going to go back up over time, which is, of course, most likely true. So if there's a 10% correction, then, we just know the market's going to go back up over time. And it was like, well, that's pretty much what a long-term, what these long-term investors say. Just hold it. And eventually it'll go back up. It doesn't say much for them calling the moves, though, does it? But, that's one strategy. And, if you can wait it out, if you have the money, it's probably a darn good strategy because the market consistently goes up. We all know that, right? So, excuse me. So I'm going to get into, in a few minutes, showing you the RV strategy layout, the version layout that's in the book, Day Trading Volume 1, that started this whole revolutionary large cap scalping movement years ago. So I will show you that, and I will make that layout available. And then I will also make this layout available, what you see here, to see how do I actually trade if I'm not mic'd up? How do I actually trade with my group of people if I don't have to worry about the speed of the computer or the latency of the internet or whatever it might be. And I do have videos out, as you guys know, that show you how to speed up your computer and all the tricks that I use. And one of them is, it's amazing, I do have a dedicated box out on the street. Somebody made some comment about like, yeah, like you have a dedicated box. Like, yeah, I actually do. What they do in your cable boxes out on the streets is they always have a spare for when stuff goes wrong that they can hook a line into while they're doing some repairs on the streets or whatever they're doing. And what I did is when the guy was out there working, I made a big deal about how we have so many people depending on this, And he said, well, I have a spare here. I'm not really supposed to do that. You could see his meter. He was checking latency of everybody in the area. And he says, but there's a spare here that's untouched, so I guess I'll give it to you guys. And I said, that would be great. And ever since then, we've had that. So call that a stroke of luck or whatever, but it definitely helps us. It does seem unbelievable, but it isn't. It actually happened, and stuff like that happens sometimes. And we just got lucky that we have like the fastest speed you can get that isn't split to a bunch of other people. Really, it probably doesn't make that much difference, because as long as you have a fast enough computer, you shouldn't overwhelm what's coming in off the street. It should be able to handle the sink or swim platform, which is what this is. But yeah, having a fast layout, having a fast cable that comes to my house and to my businesses is very, very important to me, and whatever I can do to get that. And then I work my system around making sure it can utilize the highest cat level as well as the, everything else in the memory. And I think in that video I showed tricks about how you can open up many different platforms and move them to different screens. I have different screens all around me. You can open up more than one platform at a time. So keep that in mind, guys. But anyway, so what this is here is more like when I freestyle trade. I think you've seen sort of this kind of layout that I've had many times. But if I don't have to worry about speed, I put all the custom indicators up that I think are really helpful to me. So I'll go over what these are briefly. So on the 1 minute chart right here, let's go ahead and open it up. So I have the 9 moving average. These aren't studies, but I mean they are studies. They're not like tools that are going to slow you down. 9 moving average, 14, the 20, the 50 for the day, the 20 for the day, and there should be the 50 for the day, the 100 for the day. They're not in the right order here. And then the 200 for the day, and then the VWAP, and then I have the buy-sell oscillator. I have the market magnet, and I like it with no labels. And then I have the multi-time alignment with labels, and I have the whole and half dollar, and then I have the MACD directional, and then I have the momentum directional. So wow, that's a lot of indicators to have on one layout, let alone one chart, most people would say. And why would I need these? Well, they help a lot. They really help a lot, guys. They literally show you which way to go at any given moment. And then down, you go down further, I even have the scalping indicator, which is down here. So this is, of course, how it all starts. That's the best indicator that there is to get for scalping and day trading. Well, 1 minute particularly. A lot of people use it on the 5 minute. You can go in the gear wheel here and set it for a different time here if you want. So you can set it for what time you want. But I find it's best on the one. I trade on the 1 minutes. So, and all of these have, like on the whole and half dollar, I'll give you a little heads up here if you didn't already know. You can set the price of where the price action is right now. So mine's set at 105. So then these whole and half dollar lines will open. So if it's not in the right place, just go into that gear wheel and set it up. That's the great thing about having a custom script. You can change stuff like that. And then, these are the other ones which I would watch to learn about these over at the $1 Million Margin Club. I would start watching their Trader Toolbox series. I know they're going to be cranking those out, and they're going to have one for every indicator, a lot that I don't have that are very handy. So that's what's on this chart, and I'll go over what is what. Like this is the market magnet up here with the high range and the low range. Okay, this is the magnet itself right here. So I'm going to watch that and see if you see blue lines coming across like that. It kind of tells you like that's the last price action, meaning this is probably going to pull down. So that would tell us, if I read this, I would think that, well, no, I would think it's going to go up because it's going to go toward the magnet, right? It should be going toward the magnet. So it's kind of hard to read when the volume, at this time of day, the volume isn't moving this stuff as much. But anyway, that's the market magnet, and that's the range in between, instead of 50% of the overall volume for large cap. This is designed for, and I don't have the one with the labels because I don't want the labels up here. I can see what's going on without labels. So I just have the arrows and the range and the magnet. So that's one that I have on here. And then the red and the green arrows here, there's red here, green here. That's the buy-sell oscillator, telling you based on an RSI formula which way they predict the price action is going to go. And that's about 70 to 75% accurate. You can see here it wasn't really right. I mean, it was right. It said at the end of this it's going to go up, and it did. It just was very short term, then it kept going down. Same thing here. It said it was going to go up, so it did, but then it went down. I prefer the ones that, are the other way around, where they're just literally turning it around. So then you have another one that's great, which is the momentum directional indicator, which is these blue and brown arrows. Now you're going to find that these are a bit more accurate. This is a short term that is usually 80-85% accurate. I use it all the time. So you can see it said this is going to go down, it went down. This is going to go up, it went up. Now this is based on a 12 candle back reading, and that was tested, back tested for many months, and that formula. So that's one to think about getting. Because really these indicators become like printing money when you get enough of them that align. It's really good. And then this one here is the MACD crossover here, and this is another one that, like, when you see these, like you had two here, you had this arrow saying it's going to go down. You had this, so that's the buy-sell oscillator. You had the MACD say it's going to go down, and then you had the momentum saying continuing. I mean, this is a no-brainer when this one popped up that it's going to break this magnet level. It's just a no-brainer that was what was going to happen. Most likely, the scalping indicator read it really strong right there too, that was going to go down. So this would have been a really easy trade to jump on with 100 to 500 shares. You get it at like 103.75, and then it goes all the way down to, so that's, well, it's not that much. It seemed like that was all the way down there, but that's like another 62 cents. So, that's a good, solid trade. Here was the first time it said beware, So you get used to reading these over time. Now, part of the multi-time alignment, which is this is telling you that you don't have to have these charts open. You don't have to have these on your layout. This gives you the great thing about this is going to give you this information on a 5-minute chart, 15-minute chart, 30-minute chart, 1-hour chart, 4-hour chart. It's going to give you the information that you need without having the charts. So as you know, when you see me talk about getting the perfect trade, you're looking at the indicators to help you, but you're also looking at the other charts aligning up. Like if it's green on your 1 minute, you want the 5-minute to be green going up. You'd like the 15-minute to be green, the 30-minute, the 1 hour. You'd like everybody to be going up. Everybody, nobody fighting against you. Everybody wants to go up, right? And why that's important too, like on the other time frames, like, so here's a 1 hour, right? So the 1 hour, they were going to go long, and the last thing you saw on your 5-minute was short. So every 5 minutes apart it's giving you the new time increment for the other chart. So eventually there'll be a 4-hour up here. There's a 30-minute. There's the 4-hour, right? Right now it's red, as you can see, but that'll change color as you get closer. It's going to tell you where it's at. So I like having these 5-minute increments. Some people think they're too busy. If you do this, wow, that's a nightmare. What the heck is that? You can't trade that way, right? But you don't trade that way, right? So you zoom in and you trade this way, and those are the whole $half lines as well. Now remember, that's trading with the crowd, just like everything here is, right? So now you just go like that, and you don't have a big mess anymore, and you can just see what you're trading with. And you want it when it gets up to that 5-minute increment, you quickly look up what is everybody else about to do? What are they about to do if they're trading on a 5-minute chart? And this is going to tell you right then, like, are they lining up? Right now, the momentum down. This is the momentum indicator, which I have adjusted to only show this up or down. It doesn't show the prices. And I do believe they have it that way available now if you want. But, it's fine to have the labels too. I just want less labels on my chart. So this was a no-brainer. This is the momentum indicator, and it's telling you that to go down. So when you see it, you jump on, you go down. Remember, and then another, now the MACD also said stay in the move. So again, playing out right in front of us, it's saying jump in, let's go for it. And then you saw for the first time, there was a reversal sign on the buy-sell oscillator. See that arrow? So now it's saying, hey, be careful. You might want to just take your profit right now. So it's just not rocket science to print your money if you have the right indicators. And that's why, as the years have gone on since I started this YouTube channel, I'm sure you've seen me evolve about the things I talk about the things that I share that I didn't originally share, and get more confident. You've seen my trading change, and before I used to be almost always a swing trader, and I would give advice on how to swing trade in my group. It's a different kind of quarterbacking. It's not in the moment. And now I give advice on how to trade in the moment. And as I learned to do that more, scalp more over the years, I saw that there was a huge need for better indicators that nobody had or nobody used, and you just had to tweak them. I mean, most of these are based on data that already exists, on indicators that almost are the same but aren't the same. So what I just did is I tweaked them, made sure I had the right to make them, and originally I was giving them everything away for free, and it was just too many. It was just it was almost more the complaints about the people that got free stuff that made me stop giving them away for free than it was the money. But the money's not bad either to sell them one time. I'm not into like point of sale, like you're going to give me money, I'm going to send you product. That's not something I want to do. But when you have other companies willing to buy the script and you just wash your hands of it, and then if you have a complaint, then you go to them and stop complaining to me about your free indicator. That's why I pretty much stopped giving away for free. But why I'm thinking about that, a couple of things that keep coming up. So I will give brand new indicators that I develop, and I will be developing at least a couple a month. I will be giving them away for free for 2 or 3 days. So if you remember to subscribe and get a alert that when the new videos come out, yes, I want you. Yes, it's a marketing scheme. But at the same time, you get to take advantage, right? So it's a win-win for both of us. I get to have you here continuing to follow along and watch me, which makes me feel good. And hopefully you're learning something. And then you get a free script. The other way you can get a free script that they're offering over at the $1 Million Margin Club, and they're getting scripts that aren't just from me now over there, so they're becoming like a script place to go, and they now have the trading view scripts as well, so I would highly recommend you go there. Maybe I'll give a quick clip in here about how to do that, but they are offering a way to get free scripts, in a way, if you have purchased any of their books at any time. It could be a logbook, which is cheaper than a script. Think about it. So you just have to review them. They get more money by the reviews being on Amazon. So they want people to say how they feel about their book. Hopefully they're giving a nice, good review. And then they will, if you can take a screenshot of your review and send it to the info at the $1 Million Margin Club. They just need to see a screenshot proof that you gave a review, not just a picture of the book. I mean, it has to be in an Amazon review. they'll give you a free script. You just make sure you say what script you want. And you could do it with 10 books. You get 10 scripts. So the other thing they're doing over there, and I will market for them a little bit, is they're putting scripts in bundles. So now you can get, if you buy like 5, you get 1 free. So if you're going to get them anyway, you might as well buy the bundle. So I just wanted to bring up ways you could save, which is what I like to do for you guys. So that was everything that was on the 1 minute chart there, and the scalping indicator at the bottom. And then over here on the 5 minute chart, I do have, the main thing I have here is the dashboard. And I will use this. You don't see me normally use this when I'm mic'd up to trade, but I have the ADX Crossover with clouds with alarm. And then I have the dashboard, so I can quickly glance over and see this. Besides just, this is giving me the 5 minute volume, which is why I like it too. And they're way up, 1.6, 1.8 million. So right now it's going up in volume since the last 5 minutes. And it looks like it's going up as it goes. Everybody wants to jump on it going up. So, you had that downward move, and then it told you. Remember when I said, hey, here's the first sign, it's turning around? Well, there it goes. Turn around. Then it says, hey, it's really turning around. It went up. Here's a sign that said, beware. And, if you didn't, you might not want to get out till it went down here. But if you did get out, then you just might want to jump back in again. So they're not right every single time, obviously. And I'm not sure why. I mean, I know it crossed over in order to do that, but I'd be looking at other data combining before I jumped out. See how the buyers dropped way down right there? Well, this was this one, yeah. So this was this one. So no, the buyers were at the top, and it was a higher level. It wasn't as high as the sell. But I do use the scalping indicator and the percentages, which are inside. Green is the buyers, red is the sellers, blue column is the volume. This is the one that you have to have if you have nothing else. So anyway, on the 5 minute chart, I have that. I didn't open up the day chart. I also will show a daily trend. I just want to see, and it's trending down. And just a quick overview. It helps me when I'm looking for a stock. It's almost the first thing I open. And then the 15 minutes, has the capital. So once I take a trade, this will light up and tell me where it's going with the capital. And then when you're doing like 1,000 or 2,000 shares, or you build up to that position, you really want to make sure you're not using margin. You're not going to end up, you can't hold the position in case it's not going your way. I might want to hold a 2,000 share position overnight, and I just want to make sure that they're not charging me interest on margin. So I'd want to make sure that my account can handle it. That's one of the main reasons I use this, because within the trade, it's going to tell me what the capital is. So I like this. This is a certain kind of trader. Doesn't hurt to have it. And then these other charts, which is another 5 minute, a 30 minute, a 1 hour, and a 4 hour. Pretty much with this layout, I can do the open strategy or the RV strategy or the power hour, or I can do freestyle trading. Sometimes I take away a lot of these to do, to just, if I'm having trouble with speed in any way, shape, or form, I will take away some of these and just have like a couple of charts open and not all these minimized and stuff like that. But so I will make this layout available, but remember, if you don't have the custom scripts, it's not going to, it'll just be the blocks in place, with the stuff, with the tools, and not the studies if they're custom studies. So you'll have the lines, the EMAs and SMAs and stuff. But so you want to get those first, and then they will populate into here automatically, or you want to get them, do them afterwards. So I'm going to give you more information about that, but I wanted to make sure. So, and now when you go to here, make sure you open up the, your setup wheel, and you open up where it says import item, share, import share item, or whatever it says right there. And then you push Control V, and then that. So you highlight and copy the link I'm giving you. You don't press it. You highlight and copy. Okay. And then you go into your setup wheel, import, and you're going to shared item, and then push Control V, and it will go in there. You can rename it if you want. And then just apply or add, and then basically it is there, but it's going to prompt you to press here, press a box will come down up here, and it'll say press this, do that. Don't do any of that. You already have it. And then it's just going to say error because it can't understand the custom part of it. It can't do it that way. So anyway, yeah, so that's I wanted to make sure you guys understood this layout. So next, guys, I'm going to go into how you set up the RV strategy. So this is the layout that I use, but I'm also going to show you the one that they use in the book. Now remember, one of the main points of this video was to try to show you how everybody's making so much money on this amazing strategy that came out a couple years ago. So the first thing was to show you a layout that I use, that the professionals use and the prop firms use, and what everybody's buying to give them a leg up and an edge. But before all these custom indicators kept getting better and better, there were people making millions of dollars just trading the strategy with no special tools, because the strategy is amazing. So and that's in Day Trading Volume 1. I'll have a link to that book. That book, it's called Volume 1 for a reason. I mean, almost every trader worth its salt has that book, and basically it starts right from the beginning. Like if you want to get an overseas account, what do they ask on the applications? And then, it goes into like literally the ABCs of trading and the basic indicators to do day trading scalping, right? And then it becomes a study guide, which is what you never see in these books, which is why it was so popular. It's a study guide. So it actually will tell you exactly how to set it up, exactly what the layout should be, exactly how to find the stock, what the criterion is every day. And then it shows you examples of trading and when to go in and out of a trade based on the signs that are based on the strategy. So that's why it was revolutionary. It's a study guide. In fact, all their books are study guides. At least Day Trading Volume 4 is, Day Trading Volume 1 is, Day Trading Volume 2 is the Candlestick Pattern Playbook that's so popular, and 3 was an add-on to that, which has puzzles and games and really helps you learn. Volume 2, the Candlestick Pattern Playbook, has flashcards, and it's all about learning your candlestick patterns, and it's the only book that's rated. So again, I'm going on about the books, but what I'm really going on about is to give you the tools that most every pro trader that's making money has, that's going to help you get a leg up to make this money. I want you to make money. It's the whole idea of this channel, is that you make $100 a day, $500 a day, $1,000 a day and up. And it's not just going to happen. You need to have the right tools. And it starts off with just, it's free to trade on Thinkorswim. Read a book for $24.95. You don't need anything else, right? You could be that easy for you. It just gets easier with custom indicators. And remember to trade in a simulator first, and have a day trading plan. For most of our guys, I help them make a day trading plan, and that's something I'm going to be offering soon for free for people. So stay tuned for that. If you're still watching this video, I will help you. You'll have to answer a few questions because I don't know what to do for you, but based on what you can handle, what your risk level is and things like that. So I'll be doing that soon as one of the many things I'm working on and I don't have enough time for. But anyway, we're going to go in right now in a video that I made a while ago that shows you how I pick the stocks, and then it's gonna the next video will come in and show you how I set up the RV strategy, right? And then I don't know what the next clip will be after that, but the idea is to get you the whole strategy. Okay, guys? Hey guys, I'm going to show you what I go through every morning if I'm going to be trading the RV strategy. How do I find the stocks? I get asked that a lot. Obviously, you're going by your scanner ratings, as it says in Day Trading Volume 1. So you want to make sure that you follow their ratings. Now, there's been a few changes to that as the markets changed since early 2023 when the book was first printed. But for the most part, it's very accurate. So if you go to your scanner right here, you're going to see I have this set for 10. Then it is ATR is greater than or equal to at least $4 within 14 days. That day means the 14 means days, and the 4 means dollars. So that's going to make sure it's 4 or above. I think the book says 5. Some people even said it as low as 3. It really comes down to what is the volume. So I have this set so the volume showing the highest volume first as well. These are going to be my main contenders, but I go through more of a process here. Here's the other scanners settings set up to make sure it's an RV stock. I have it as low as $25, although it's doubtful you'd get anything below $100. But it's set there just in case there's a weird anomaly that comes in. All right, then over here on my watch list, I will have a watch list set up that's the same. So, I mean, you can detach this gadget, and then you can put it anywhere you want on another screen or something to show your watch list. So that's another way to find them without even scanning, like what you're just going to go to the tried and true ones that you like to trade. But generally, the next thing you have to do that's really, really important is to figure out how are those stocks going to perform. So I have a day chart set here so you can know. Normally my day chart's a year back. I mean, this one's set for just a month back. And the main reason why is so I can see within the last 10 days, right? Within the last 10 days, how much price action is going to fall within the ATR. So we're going to set the ATR based on the close of this candle. So it's at $4.71. So on AMD real quick, you can just see this real quick without having to do any lines, any calculations. Your ATR is going to be about, high is going to be about right there, and low is going to be about right there. So you're going to capture historical data with 3 days prior of the day that you're trading. So you have at least 3 days, which is good. It's not great. The more the better. So you wouldn't get a high rating for that, but you'd still have a tradable stock it's a tried and true, really good stock. And then if you go into some of the others, like let's go to Apple and see what Apple's doing. So Apple, again, is this is a good one to trade here. So what's our ATR? So our ATR there was on $6. So now that, so this is a stock that you would be trading for the RV strategy. Now it closed here, so you'd know that you'd have somewhere right here would be your ATR low, and this would be your ATR high. So all of these, 1, 2, 3, 4, 5, 6, 7, 8, 9, even this one would be within the 10 days. So that's a way better stock to trade for the RV strategy. Right there is the Apple one. And then if we took another one, let's do AMD. I didn't do that already, did I? Did that, sorry. Let's do NVIDIA. And here's an example of what not to trade as far as trading specifically for the RV strategy. Remember, the RV strategy, you're going in between a range for your safety, and you don't know, but for the most part, you can count on the stock moving in and out of that range. So get the book, guys, but that's going to show you how I do it. That's pretty much what I go through. So I wouldn't even consider this. Now, you'll see me trade these stocks like this all the time, and I'll say, hey, we're using the RV strategy, basically the strategy, but we're out of the range, but we're still going to use the strategy. And then I've gone back further to find historical data often, and that's because it's just the trading with the crowd. People want to do it. They want the excitement of a stock that has bigger volume like this. And then a lot of times, we know we can make money by it because the strategy is so good with the Fibonacci level and the historical data that we end up picking, we might pick one that's not. But if you want to be safe, pick the ones, like I said, that have the most days. You have a rating for that. The most days that fall in between that 10-day ATR that gives you the most historical data. Then you can probably use the 4-hour historical data levels along with the Fibonacci, guys. So hopefully that clears up a lot of how we find these stocks every day. So that's what I get asked a lot is how do I find those stocks? And it comes down to just doing it, because you got to go through them quickly, right? And a lot of times you can't, if you're trading the open, this is for the RV strategy, you can't see the volatility rating. I tend to use that a lot in the RV strategy too. That's in Day Trading Volume 1, where you basically are dividing an ATR by a breakout, and you're getting a volatility rating. That's just a little secret that sometimes we use, and I didn't cover it in that video. But high, low, quickly look at a day chart. What was the close of the previous day? how many candles go back, and would they hit that if you split the ATR in half and added half and subtracted half, how many candles still hit in that range? Because you're looking for a sideways moving consolidating stock. So you can quickly look at a day chart and just go through stock after stock after stock and make sure you find one that lines up. Then you look at that volume, and you see, hey, is this going to work? And you read the other criteria. So in that RV strategy, let me just see if I can open this up. Yeah, this is the criteria for that, and that's in the book. Now we're saying over $4 for an ATR. But you're looking for at least 5 days, 5 days of alignment within an ATR, so more than 5 days alignment. And then you're looking for the SMAs, and then you're looking at Fibonacci. And then, so I'm about to go into that with another clip. So this is a long video, but if you're really interested in the RV strategy, it should be very helpful to you. This is making a difference in tens of thousands of people's lives now, guys. So this is something you might want to focus a little bit of time. Now, not every strategy is right for everybody, so you have to just try it in a sim over a period of months and then see if it's going to work for you. But I would give it a shot. So let me bring in the next clip, which is going to be basically the layout that's in the book. Now, I've shown this before, but I'm going to show the clip again. So it's a pretty long clip, but it's going to go over that sort of what we call the virgin layout without any of these custom indicators. The scalping indicator will be on there because that's actually in their book. That's how revolutionary that is, this one down here. But we're going to go ahead and show that clip next. Hey, before we go to that video, I wanted to sneak in here before I go past the custom stuff too much. So this is their website that a lot of people can't seem to find, and they keep coming to me about how to get these once they're no longer free. So this is the $1 Million Margin Club. So it's $1millionmarginclub.com, and you'll get there. This is their homepage. On their homepage, they have all their books that are scanning by here. Basically, you want to focus on 1, 2, and 4 more than anything. 3 is a great fun book to continue to learn your candlesticks. And then over here is their digital products, which is, of course, all the custom scripts. And a lot of them I have made available for them to sell. And they're on TradingView is right. So you would click either here, if you want, this is like, here they all are. I mean, I won't read them all to you, but I mean, this has pretty much got everyone that I would ever use, right? And then, and there's more pages. And then one of the things to keep in mind here is they have these bundles that, these bundles that are set for certain charts, and you get one indicator for free. And then remember that they're offering that deal if you review one of their books, then you can get, and you show them that, a picture verified review of a screenshot. You can pick an indicator for free for every book you review. But these bundles are kind of cool because they save you money too. And then here's the TradingView ones. I mean, they're adding them. They usually are a little bit behind the others, so behind Thinkorswim, but you eventually get them. Some of them don't translate to TradingView the same way. And then over here, I mean, they have their contact info, but right here it takes you right to their YouTube channel, which I recommend you looking at because they're a book review, as well as they have their commercials and stuff like that. But they've started this new toolbox series, which is really cool. So I would think about just checking out the stuff that they have there. They have a lot of stuff there. A lot of reviews of the books and stuff like that. They even have a Trading in the Zone review, and then a lot of other interesting stuff. So anyway, I just wanted to make sure I told you guys about that stuff. So we'll get back to just show you the original layout now. So this is the exact layout for the RV strategy book, Day Trading Volume 1. This is pretty much as close as I could get to a copy that they put out in 2023 in March when they printed the book. A lot of traders still trade exactly with this layout. I do for the most part, but you see I've had many, many variations as the markets changed and how I evolved as a trader, and then custom indicators, which I believe make it easier. But we're going to go virgin here. We're going to show you what a lot of traders stick exactly with what this is here. Probably the majority of traders do, and there are so many success stories. So I'm going to make this available, and let's just go over exactly what it is. So this is a 1-minute chart. It has the scalping indicator below it, and then here is a day chart. This is the active trader. This is the level 2. This is a 4-hour chart minimized, a 1-hour chart minimized, a 15-minute chart minimized. This is the time and sales. This is the a 5-minute chart for 10 days. Here is a 5-minute chart for 2 days, and down here is the news. Now we'll open and get a little bit more detail into each and every one of these. So let's go ahead and open this 1-minute chart first. So we'll maximize that. And let me just auto zoom here. So we've already passed the day. Now we traded this day, and I specifically got rid of everything so that you could see how it looked before. Well, you won't see how it looked before because we set the day thing, but we'll figure out how to I'll reset it all up for you before we traded, and then you'll be able to see the trading already. I mean, you'll already have seen all this, whatever. So anyway, so this is a 9 moving average, 20 moving average, and the VWAP. This is the volume profile, and this is the scalping indicator. Now, the difference down here, I will point out, this is the more modern one than what they show in the book. The difference is it has the VWAP and 14 EMA crossover. So there's no reason not to put that on. It's giving you all the same information and a little bit more. If you want to get the other one, you can still get that on the channel too. So, or the $1 Million Margin Club has this, but it's definitely worth $24.95. They have that available. You can just use the regular volume profile if you don't want either of these, which the book says, and we'll talk about that on a 5-minute chart in a minute. So this is just a load-in type of situation. This one here, the volume profile, is the Thinkorswim one that's offered for anybody, and it's set on the 70-30 range. Let me show you a little bit more about that. So the difference to get it inside here, where it's marked today right here, is you want to change this from yes to no, right? So if I put this back to yes and applied, it's going to move it over here instead of being in the day's action. So that's one of the biggest differences about this. So you definitely want to get that so you can see what's going on the active day. This was something that was discovered by professional scalpers a while ago. The other thing you'd want to do is you'd want to make sure that the high and the low, all the boxes are on, and that they're the colors that you want, the low red and the high green, right? So we'll go ahead and apply, and you can see there's the high green and the low red. Now this is a 70% for most all stocks. Now the market magnet that you might be familiar with that we'll show later on, it's not in the original book, is set it down to 50%, which is far more accurate for large cap, and it probably would end up about right there where you saw it hit a bunch of times. So we'll talk about that later. And then the scalping indicator down here, pretty amazing. So now we're at a closed market, but the blue column is the volume, the red are the sellers, inside, the green are the buyers, and then the sentiment would show up over here. So when it's not a closed market, this is really flying. So you'll see some of that coming up. And then down here is the day chart. Now different, you don't see me use it a lot here, but this is the 50 SMA, the 100 SMA, and the 200 SMA. And this is the ATR, the average true range of stock over a 14-day period. This is how the book says to set it up exactly. Let me give you an example of why this is important. See that 100 moving average right there? Let's just click along where it's closed the previous day, which is probably about right there. And we'll make a line there. Now let's look at the price action here on a 5-minute chart. So here is where it moved throughout the day, right there. So tell me that's not respected. This is before fibs or anything. So that is a number that you'd want to know, and you'd want to mark it on the SMA on the day chart, because that was marked back here the previous day, and here it came in and hit that line and really respected it. So something to think about. There's the reason that these studies are in the books, in the book Day Trading Volume 1, because it's been tested by so many professional traders. Get this over here. Then this is your active trader. This is how I have it set up. If you want to go in and change it, you can, move these things, add item and remove an item. I just drag them, if I want to do it. So like for this one, if I said buy them, I could just drag that off. and then I could just drag it right back on. But you could do it the other way too, add the item if you want. That's how I think that the book has it almost exactly like this. Then there's the level 2. Then down here is a 4-hour chart, just like the book says. This is clean. Let's get rid of this. So this is just a clean chart, how you should have it. I do have these set up here on your chart markings, but this is a 4-hour, easy to mark for when you're marking historical data, like in the book. This is the 1 hour, nice and clean. This is a 15-minute, nice and clean. And then over here, this is the time in sales. So remember, this is actually, let's go over the bid and the ask here a little bit. So this is what people are bidding for a stock, and this is how much the people want to get for the stock. These are the exchanges that are going to make them available. All right, and then in between, to connect these, they call that the spread, 4 cents in between. So in between there's sort of picture a bridge going over with a toll booth in the middle. So the market maker, which gives you this price here, which when it's closed, it's kind of skewed because it wouldn't be higher. It would be in between the spread, just so you know. It would be like probably $232.52 is what you'd get. But since the market's closed, it's kind of giving you weird things. You'll see in the trading. So, and then this is the number of shares, but you multiply this by 100. Okay, so that's how many are waiting at each of these prices. So the market maker is going to charge you a commission to fill this a little bit. He's going to mark it up a little bit, and then they're going to try to give you the best price they think. I think it's where they make the most money, but whatever. There's be arguments about that till the end of time. But so anyway, that's how that works. And then after that happens, that transaction, then this is the ticker. So it shows you the sale of it. It happens over here. It'll show you what the price was, how many shares there were, and without multiplying these by 100, right? So you see those kind of shares coming up at that price, which is sort of what they ask is you're going to be worried about that because all those have to sell before yours is going to get filled or get bought up, however you want to look at it. So, this is why sometimes watching the level 2 is important because it could stall and go the opposite direction when you hit that number of shares. For the most part, you're seeing several hundred, and then it's their job, the market maker's job, to fill your order the best they can with the least amount of what they would call slippage. Like if you had 500 shares to get filled, they're going to try to fill it with the least amount of the price moving. You can see this moved, these are all at 55 cents, 55, 55, 55, 54. So probably you could get the 500 filled at very close to within a penny or two of the price that they're waiting. But I don't trade with this much, but you usually, rather than trying to watch the time, there's the time over here. This is why it's called time and sales. All right, the time's over here. But usually people are looking for big clumps of red, big clumps of green to see, hey, what is the sentiment? Watch, because this is going to be flying by. But on large cap, mega caps, doesn't come into play too much, okay? Now let's get a look at the 5-minute 10-day. So this just has the regular volume that is offered with Thinkorswim that you might want to watch. So you want to pay attention. These coincide with the candlestick patterns, and you want to see if the momentum is going up when you're getting ready to buy. Is the volume going higher? Like right here, see the lines with this? If you were sitting right here in this position, but then you saw this volume go above the last volume, you would feel more comfortable to buy. And that's basically why people look at the volume. There's a lot of other indicators that help you a lot better than that, but this is the very basic on a 5-minute, and that's how this chart's set up in the book to do. And then down here you would have the news. No, another 5-minute. I'm sorry. This 5-minute is set for a 2-day. That last one was on a 10-day. This is a 2-day. That's so we can set our Fibonacci levels. Now, this is in the book exactly like they say, the RSI, when the price action goes above the 70 level over here, they think it's probably overbought and expect it to go back down. When it goes below the 30 level, it's probably oversold and ready to go back up. Now, I'm speaking in probabilities when I say probably. There's no exact. It's just the probability is more likely it would go the other direction. So that's all you get. That's the best you get with indicators is the probability, right? But as they've been getting better and better, in the last few years, it's literally like you can see the future. So we'll talk about that a bit. And then this is the ADX. Now, in the book, it had a newer ADX, a custom one. shown in there as far as I know, because I used to use it. This one's just better. So I just put the better custom one in, really. Now this is just finds a directional. I mean a momentum, like a momentum directional. So see if you're trending or not. So you don't, before you could just tell if it passed the 20, right here, it meant like, hey, it's getting ready to make a trend. When it passed the 25, it made a trend. Okay, you're in a trend. But then it was confusing, what it's a trend, but is it up or is it down? Well, this makes it easier with the clouds and the colors here. Even though it's above this line, it doesn't mean it's all upward trend. This is a downward trend because it's red, but it's showing you the strength of the trend. All right, the directional indicator is showing you the strength. That's what this does, the power of it, okay, with the clouds, and then what way, is it up or is it down? So there's a couple of videos on this that I made that I would watch, but that's how that works. So that's a little different than the book, but you might as well use the better one. And then down here is the news. So, and that's what they say to put in. I have that on a separate chart normally on mine, a separate screen. That's basically the whole thing, and I will make this layout available for you guys. So let's go over exactly how we set this up from start to finish now that you have our layout here. So the first thing you do is, according to the book, Day Trading Volume 1, is you go into the day chart. You look at the previous day. So let's get some price levels set up here. I'm just going to put some random price levels. So the close of the previous day, if you look up here, that's C is the close. So I go over the candle. It said $227.65. Then again, I'll go back over that candle and you look at the ATR, the average true range over a 14-day period. Okay, so that average true range was $6.45. We'll call it 646, so we can divide it in two. So when we divide it in two, we got $3.23, and then we add it to make the high, we get $230.90. So let's set that one first. We'll go ATR high. Oops. Okay, we're going to make the high green, and we're going to make it triple thick, and that's our ATR high right down there. So you can see the candle closed there. So this is where, the candle closed here. So here's where the high is. So you expect the low is going to be down here. So the low is set in at doing it backwards here, 3. And then our price was $224.44. So that's down there, and that's about right. Here is the middle. So what was the purpose of that? In the book, it explains to you that you're basically trying to find the price action that will happen today. So you're using the previous days to see where that moved. You've created a giant channel or a giant range by taking a single number and dividing it into two and then splitting the difference from the close. So you can see that as it traded throughout the day, because we're past the day now, that it did pass it, but there was a lot of trading in it. So the next thing you would do on a situation like this is you go into the situation on the book is you go into the 10-day 5-minute. So this is set for 10 days on a 5-minute chart, right? So we're going to go back and we're going to make sure that we don't mark today by accident. So here's today's trading action, right? And you look for the high and low. Now, when you're marking Fibonacci levels, you always mark left to right. They could be low to high. In this case, it's high to low, but you're always marking left to right. And the book says you get right on the wick, the highest points. That's for 248.35. Got to speak here. Been a long day. I'm just going to end up typing it in there. 48.35, and this is 225.02. Let's see if I do any better here. Yeah. Oh, I'm not doing it. Hang on. What am I doing here? Remove drawing. I'm doing a Fibonacci level. Okay, let's try that again. So click on your Fibonacci up there. Hey, look at that. I got it the first time. 48.35, and then that's going to be 02, 24.02. Look at that, baby. All right, so there's your fibs. Now, this opens up. Now, when people use Fibonacci levels for a lot of things, considered nature's mathematical formula, in this case, the lines all are given the same weight as support and resistance levels. So you're looking for which one's dropped in between, right, the Fibonacci, the ATR level. So you have two of them that you'd really want to watch. In this case, we know that the price action left for the day. So what happened? Yeah, so this one ended up coming into play too. But we don't know that that's going to happen yet. So let's go to the next thing we do, which is you go down to the 5 minute here. That's a 2-day. So this one's set for a 2-day, right? And let's give us a little more space to work with here. So you can, there's a chart video that shows you how to do all this stuff. But in this case, now you can't use either of those. So we're going to find our own high and lows after 2 days. So this day didn't happen. So it looks like this would have been the high, right? And then the low would have been just before the market opened. So right down here. So we can use this one. So let's get our fibs here and get into the same basic, same basic area here, which is, this is, well, we're close, probably about right there. And then we'll go down to the low, which is 226 even. Come on. I had it. There we go. And I'm going to go ahead and mark that a different color while we're on it. So we know the difference between the 5 minute 2-day and the 5 minute 10-day. So let's just make sure we've got this marked correctly. So this should have been right here. That high of that candle was H234 even. So let's make that 234 even. So it's 1 penny off. That was close. All right, so now we have all these channels created in between the ATR levels. Let's open that back up so we get a better look here. Now we can already see that a lot of them came into play here, but let's just look at the price action for today, and we'll watch this day trade out. I'm after it now, but I wanted to make sure I could recreate them for you and give you lots of time to see this. So you're trying to create channels, and you can see this Fibonacci level is already giving us a lot of channels, but it's above the ATR. So when we go to mark our historical data, we're going to be at a disadvantage because I'm not going to know this is going to happen. So we're going to end up using these fib levels a lot. Now you can mark levels after it started to trade, like you might want to, mark that high during the day. That's it. Well, that's actually, it's over. So this is where it would have come into play right here. So barely, it just hit that fib and turned around because the trading would have been over right here, 10:30, a half hour after market open. So we're doing a little bit of analogy here, but let's continue to set up. So the next thing it says to do after that, according to the book, is you go to the 4-hour chart, which is right here. And you look for historical data channels in between the ATR. Let me just make sure. Wow, so what a day, huh? Yeah, that was a heck of a day. So it just broke right out of the ATR upper range. So we would have been looking from basically this area backwards and looking for anything that would have marked it. So here's what we would have done. So on a 4-hour, I'm just trying to think if there would have been enough to. I probably couldn't have got more than 4 or 5 channels, although the fib's in there pretty good. So what am I looking for here, guys? I'm looking to create channels because the way the book reads is that in between these channels, this is where you try to take your trades, and you want to set your share size based on the traversing the whole channel. So this would be like, this would be a pretty big channel from 226 all the way up to 27.89. So that's way too high, 227.89. I would not want a channel more than like 25 cents, 30 cents. So what can I do? Well, I can mark one there. That helps right there, and then maybe mark another right there. That probably could have cut them down. So I'm seeing where the price action turned around, and I'm going to mark a level. But frankly, it's not giving me as much as I want, so it's tight. So I think I'd go down to the 1 hour and look for more places I can find a legitimate turnaround. So let's start with that. We can go back as far as 10 days. So the first one I'd probably mark is right here. Let's change this to, so we're going to put 1 hour because that's what we're marking this as. And then I'm going to turn this off, and then I'm going to save that as the default. And there's our first 1 hour level right there. And then I'm going to move up here without, I'm not even going to look over here because it's not, you start from the furthest back, right? So probably there's so many taps right there. And then it seemed like, it seems like actually down here, over here, and then across here, it seems like this is actually a better level, like right here. You're hitting the most here and then across here, all right? And then definitely down here, and hit there again, there, hit here, here, and here. It seems like our ATR, our Fibonacci level takes care of that. This is almost being taken care of here. This is another one, another area where there's multiple taps. So I probably hit that. See how it tapped it there too, and over here. Okay, now these are all within the ATR. So I'm just marking the levels that I clearly see. Here's some others right here. And then this would probably be another area I would mark inside the ATR, like right there where it abruptly turned around. Now, not knowing that the price actions is going to go above that, often I'll take a few below and a few above. Now, what this tells me as a trader that does this a lot is there is no sense normally marking below when most of the price action's above and it was starting to curl back up. But maybe, I would listen to the news too, maybe, but there's nothing to mark down here, right? There's nothing to mark. There's no price action over here within the 10 days. So this is my only other choice. So I would go ahead and mark a few of these. That hits so many times there. That hits the fib. This hits here. So I would mark all of those, and I'd probably mark where it abruptly turned around right here. Probably right there, actually. And then that would pretty much be all I could do. Now that would have fulfilled. Now the book says you mark it at a 4-hour chart first. I don't believe there was enough channels. Then the 1-hour chart. And if there's not enough channels, you go to the 15-minute chart, or even the 5-minute chart. So I was able to visually observe this is going to make enough channels for me to follow the strategy to get in and out. So you're following the overall range, and then you're making channels for tighter range. Let's see how we did. I know I did good today trading. Let's see how this isn't going to probably be exactly like how I set it up for trading, but it should be very close to it. So here we go. Now we look at the where we started to trade. So we would have started to trade right here. Okay, then we would have stopped trading like at least by, I think I went a little later, right there. So here's where we can see how did we do on our trades here. Oh, I'm on a 5-minute chart. That's why why don't I have more options? Let's go to a 1-minute chart here and get back to where our time here. That was the hard way. Okay, now we're cooking. Okay, I was thinking like something's wrong there. So I'm looking down at the time down here to find where we would have traded to, and we would have traded a little bit past that. Let me pull this back to so I can get over to 1035. Now I'm going to open this up so we can get a better look. I'll go from 956, 956, 7, this area, and then I'll pull it over to get past 1030 to about right here. Now here's what I would have seen as it developed as we started to trade. So my first trade, I probably would have called it long here. I probably would have been correct seeing it stepping up here. Now, as you know, it came off this fib. There's a Fibonacci level here. So I would have played that up, and I might have turned around here. You're going to get to see. And then up here, I would have loved to have a level here. So this would have, I think I probably struggled here, but played it off this fib, and then at some point jumped the right direction. Again, we don't have any levels here. So I definitely missed a level here. So I don't know did I actually miss a level there? Let me just make sure, guys. That is how you set it up on the book, though. So I don't know where we were having trouble, up. So we were having trouble, up in here, right? That there wasn't. There was no levels marked up in this area, right? Is this where we were? I can't remember where we were. Darn, I should have checked. Let me do it again. Taking a little longer than I wanted to take here, but let's just take a look here where we were having trouble. Because I may have just missed a level. So right at this price area, like 231.27-ish, and then 231.94-ish right in there. Let's see if there's a clear and obvious area that was missed. Happens. So this is where our historical data is. One. Right here is not really. I don't really see anything. I think we had this void up here where we hit. And oh yeah, there was definitely some. Well, this is because this is above the. This is the problem. This is above the ATR, so that's why they're not marked, because it does look like there's a clear spot right here. If I'd marked more above, look at that, you know. So that's just a shame that we didn't catch those the first time around. But that would have been areas that if I'd played it above, I would have marked all those. So it's not rocket science to see where these things are. Did I do those in the 5 minutes, I hope? Yeah, I still missed that one. Let me just do this for a second. I'm just curious to see how far off this is, why this isn't marking it. That's right there. There's no real level there. Oh, God, look at that. Yeah, right there. I clearly missed that. So that's the thing. You know, I did it fast for the setup here, but that, I should have gone back far enough to catch that. That's a clear turnaround if you've ever seen one, and that's right where we needed a level. So this is the thing. I can make mistakes all the time. What would have been happening when I traded that is I'm not sure I would have gone back, or somebody else would have. A lot of times other people call it out to me. Where it was, or I might have just marked it right on the actual. Is this the 1 minute chart? Yeah. If this hit like the fourth time, I probably would have put a flat top there, and then started to use. You guys have seen me trade, so I would have caught it eventually, but I should have caught it when I set it up. Is what it was. But anyway, that is the step-by-step how you set it up, and then you're trading in these channels. You're trying to go up and down, short, long, or if you only trade long, then you're waiting. Boy, did that fib ever get respected. Right at the ATR. You know how I respect the ATR levels too? It just kept playing off that ATR. We just missed that level. We would have had a perfect setup here. Eventually, I would have got it the hard way. But I can't remember how I traded it today. But anyway, guys, that is the literally step-by-step how you set up these charts prior to the day beginning. Whew. Well, that's probably a pretty long video with all those other clips, but I think it's hopefully you'll find it very, very useful. And then I guess I'll give you this parting bit of information here, and wait around. Let me say it. Don't click it off yet. So we're going to be, a lot of people are going to be struggling now, and I'm going to remind you about trading in a simulator, having a maximum loss per trade, a maximum loss for the day, make a day trading plan, follow it. Okay, follow it. And if you want to just sit out for a little while, sit out. The great thing about scalping is you don't need to do that, because unless you just don't want to trade short, you can trade short and you can trade long. And I would be short biased right now for a little while. I wouldn't want to hold a position and then double up as it keeps going up, thinking, oh, it's going to get there. I would only do that going down. That's some advice I'm going to say. But remember, I am not a licensed financial advisor, so you have to do your own thing without copying anybody, so remember that. But I would say, guys, stay strong through this time. It's not going to last. It will turn around. And it almost seems like this is self-inflicted, and I hope the plan goes well. Manufacturing comes back and all these things, and but the great thing about the stock market is it always does come back. It might take a little longer. And then the great thing about what we do is we take advantage of the situation on any given day, no matter which way it's going. And that's why so many people have moved to day trading, scalping. And really, when I say day trading, I should be saying half-hour trading, 1 minute trading, 5-minute trading, because you just don't want to hold. My personal opinion is I don't want to hold in a situation like this. I'm not going to be doing swing trades unless I'm really planning to hold them for 6 months to a year. Now, the market's very emotional, so somebody could just say something, Trump, for instance, just say something that gets people like, oh, my God, it's all going to, change now because of what he just said. And then that just whether or not it really gets implemented, the market just moves. It's just so emotional. So, and the advice I would give is trade with the crowd. Whether you agree with the crowd or not doesn't matter if you're interested in making money. Okay, what matters is which way is the price action going? Which way do your indicators say it's going? Get on that ride that short term, ride that, jump off. Ride that, jump off. That's it does. You're not trying to be the one that figures out what's going to happen when you're a day trader. You're just taking advantage of the moment immediately. That's the advice I would leave you with in these times right now. But I think hopefully this video will stand around for a long time, and by the time you're watching this, the S&P's at 7,000 or something. I don't know. So all right, guys. Thanks for watching. Always stay inquisitive out there. I will see you next time. Go green.